like to start with the current economic outlook and then talk about regulation and what's the regulatory outlook for Bitcoin. And then move on to politics and talk about the political outlook and political drivers. And then finally end with views on technology and how technology is driving the Bitcoin outlook. And I can't think of anybody more qualified to join me in this discussion than you. So without further ado, let's start with the first question. What's your current economic outlook for Bitcoin?
Sounds good. Yeah, we'll dive right in because it can be hard enough to get all this into a span of time we have. So, because it's such a broad concept. So, if we back up for a second, Bitcoin is still characterized as a risk asset by a lot of pools of capital, and so that might not be the case for some investors that put 1,000 hours into it to understand it at a deep level. But due to its high volatility, it's still very much in the risk on bucket as far as most assets are concerned. And so when we take a step back for a second, we can look at these rate of change of economic growth. And so some of the near-term outlooks for Bitcoin are, somewhat challenging, somewhat uncertain, even as the longer-term outlook, still remains very strong. And I think that, basically as we go forward, as more analysts come into the space, there's more and more coverage of Bitcoin and the broader ecosystem. And I think that's only going to strengthen over time. And so, something I've been kind of warning my clients about recently is that as the data comes in and shows that in the United States and much of the other kind of Western countries, we're seeing somewhat of an economic deceleration in 2022 compared to the kind of the sugar high we had in some ways for 2021. And if you look back historically, Bitcoin's major bull runs are actually during these periods of economic acceleration. And so when we look at this chart here, it's the U.S. Purchasing Managers Index, and we see that back during like the period in 2020, the period in 2017, the period in 2013, these major kind of upward inflection points in economic growth were also tied into Bitcoin's bull runs, and that could eventually decouple. We could eventually see a changing of that. That kind of correlation that goes on. But historically, that's been the case both for Bitcoin and other risk assets. And so as we look forward, most of the leading indicators continue to suggest that this is softening. And I think that comes down to not necessarily making decision points for Bitcoin related on that, but it's about managing expectations and about kind of understanding the range of outcomes that could happen. When we take a bigger step back and look at the really high level view, though, we can see that even if Bitcoin has a choppy period for a year or more, the kind of the more structural outlook remains very good, and that's largely because one of its biggest competitors, what do you want to hold on your balance sheet, either as an insurance company, as a corporation, as as a hedge fund, as a retail investor, what do you want to have in your balance sheet? Right now, cash is a very expensive form of optionality. It obviously gives us volatility protection. We need it for our working capital. We need it for a variety of different purposes. But it's near the high end of how expensive it is in terms of losing purchasing power over time as you hold it. And so the chart I have here on the left shows federal debt as a percentage of GDP over time. And we see that whenever it gets to very, very high levels, you tend to run in these persistent periods of negative real interest rates for cash equivalents. So that can include cash in the bank, that can include T-bills, basically a variety of these risk-free, low volatility ways of storing value. And that's, if we look at, if we broaden this to other countries, you generally see that's the case. Whenever you have very high debt levels, you start to run into these financial repression scenarios where central banks have a tough time raising interest rates to positive real levels, compared to CPI, let alone compared to the growth of the broad money supply. And so you see many of the high quality assets, going up in value even faster than CPI. And the chart on the right there it shows another way of looking at this. So those green areas are positive real rates, and those red areas are negative real rates. And so the Federal Reserve and other Western central banks kind of find themselves in a tough position right now because on one hand, they've never been further behind the curve in terms of inflation, at least going back to about 1951. So in modern history, they're about the furthest they've ever been behind. But on the other hand, when you have the prior slide showing economic deceleration, they find themselves historically, they tend to raise rates and tighten policy into stronger periods. And so, for example, the last tightening cycle they did, they tightened through 2017 and into 2018, but they started to run into turbulence towards the end of that when PMIs were rolling over, and they didn't have the inflation levels we have now. And so this, when you're looking at the different options for what kind of assets you can have in your balance sheet, this gives kind of the high level view of why holding cash and cash equivalents is so expensive, at least, when you're looking at longer term. And we can look back, in history during prior inflationary episodes in the market, and we see that there are very different types of responses depending on how much debt is in the system. And so when we think of high inflation, we often think of the 1970s. And the chart on the right here shows the Fed's, basically I used 3-month Treasury bills as a proxy for short-term rates here because the data set goes back really far. But essentially what you had here was the Federal Reserve was constantly trying to tighten and raise rates to rein in inflation. And they were able to do that in large part because debt as a percentage of GDP, both in the public debt and private debt, including household debt, corporate debt, all these different types of debt outstanding, they were pretty low, and so they were able to raise rates, and it caused economic weakness, but it didn't necessarily cause like a solvency event. Whereas back in the 1940s, which as we go back to here was the last time debt as a percentage of GDP was as high as it is now, you had a pretty big decoupling in terms of inflation and interest rate policy. And so I think a lot of macro indicators show that the 2020s are shaping up to be very similar. I mean, we already had this big spike here. We had, the largest ever decoupling in terms of inflation and rates since the 1950s. And I think we're going to get probably more cycles of that going forward. And so that's another good kind of, backdrop for having Bitcoin as a way to protect against that. It doesn't necessarily hedge you the moment you get different CPI prints, but it's basically a structural way of holding something that has intrinsic scarcity compared to something that is intrinsically not scarce, and that for which the yields are no longer keeping up with inflation.
So we could like summarize that as expansive monetary policy and kind of loose fiscal policy that we can expect for the better part of the decade, you think?
I think that's the longer term backdrop. Is basically, I think I've been using the 1940s to characterize this era more so than the 70s, which is kind of the popular conception right now. And there will be counter trends. I mean, even in the 40s and the 70s, you had these disinflationary periods, and you have, as we look at kind of economic cycles, we see these periods of strengthening and softening. And so I think that as long as we manage our time frame expectations, that's what I do see, even though it won't be a straight line. At least I think that's the way the data is looking now.
So in the 70s, like people stampeded into gold, right? What did they stampede into in the 40s? Or what was the response to, inflation in the 40s? Did they have a technique or a primary asset?
They had fewer assets available to them because gold was illegal to own for Americans. Many, foreign pools of capital went into places like gold where they could. Commodities did well, broad commodities, silver, oil. Equities were very volatile in that period because you obviously had a lot of uncertainty, and equities are long duration assets, and so it's hard to price them appropriately when you don't know the economic outlook. And so there really weren't that many places for them to hide and to protect themselves from that. And so there were capital controls. There were a lot of challenges back then. They had a lot more challenges than they had in the 70s. And luckily now, I mean, even though we're in some ways going through a similar macroeconomic cycle as the 40s, investors have more tools available to them, including Bitcoin, to protect their capital against these periods of currency devaluation that you can go through when you have that combination of high debt with some degree of inflation.
Okay.
And I guess so for 2 more slides just to finish out this section, that's the macro backdrop. So then we can look at some of these cycles we go through in Bitcoin. And what I have here is the the 1+ year HODL wave. We could also call it the Bitcoin distribution cycle. And what we see here, so the blue line is Bitcoin price, and the yellow line, the orange line, is the percent of coins that have not moved on chain in more than a year. And so of course, Bitcoin can be held multiple ways. Some people hold it on chain, some people hold it on exchanges, some people hold securities that are tied to Bitcoin in different ways. And this is looking at the very large snapshot of on chain, which is a very big part of the market still. And what you generally see is that during these major bull runs, all this new capital comes into the space, and some of those longer term holders start to sell into that strength. Basically, they experience 5x, 10x, 20x gains in some cases. They have these, they have these life-changing amounts of capital appreciation. They want to rebalance. They want to consume, and so they distribute into some of that strength, and a lot of that new capital pours in. And then you generally see during these more consolidation type of markets, these bear markets, you generally see the reverse. You have the longer term, more knowledgeable, higher conviction holders go back to, they become a larger and larger share of the market over time. And so what we see now is that we're back in this distribution cycle where, during the early kind of bullish period of 2021 and, the whole phase there, those longer duration holders are willing to sell into that new strength. But then throughout this consolidation that we've been in for the better part of a year, those longer term hands have not been willing to sell at these prices. And, many of them are still accumulating at these prices, dollar cost averaging. Coins are continuing to go from kind of those, those faster money hands or those weaker hands into those longer duration, stronger, less liquid hands. And so that's generally what sets up kind of the next cycle. You have the macro events. You have basically, you can separate it into demand and supply. So on demand, you have what we covered before, things like risk on or risk off periods, how much liquidity is in the macro environment. Those types of factors can determine how much capital comes into the space or leaves the space. Meanwhile, the other side of it is the supply side. How much of the existing coin base is available for liquid purchase versus how much is locked up into very strong or illiquid hands. And what's made this cycle rather unique is that, in these prior periods when you had these peaks in demand, that was the top of the cycle. Whereas actually in this time so far, we hit a slight new high later in 2021. Not because demand was as high as early 2021, but because you had moderate demand and really, really tight supply. And so there's really two sides of the market to keep monitoring. Basically different analysts, I think, focus maybe too much on just the demand side or just the supply side. And we put both together, basically what we're seeing is right now we're in kind of a weak period for Bitcoin demand, as you would expect from economic deceleration, liquidity being pulled from the market. While the supply side is one of the most bullish setups we've seen. And so that kind of can segment our expectations about maybe the longer term outlook versus that intermediate term uncertainty. And for the last slide, this is a chart from Yuri and Timmer of Fidelity. I think he's been doing really great coverage of this space. And so he has a demand curve model. Basically, you can model Bitcoin as though it's a network effect, as though it's similar to internet adoption or mobile phone adoption. And so you have this kind of, the monetization of this asset over time, this asset acquiring a monetary premium. And so you occasionally go, way above the demand curve. You get that, you get momentum traders jumping on board. It's not like this it's not this very smooth adoption, but you go through these periods of fast or quick adoption. You can kind of model it over time. And of course, we can't predict the future, how fast things could go, what sort of inflection points, what sort of geopolitical events could accelerate or decelerate that. But it shows that, based on that model, we're towards kind of the value side of that. We're not necessarily in capitulation mode. The last time we had a capitulation was March 2020 during the COVID crash. The prior time was that late 2018 period, which was when the Fed was trying to tighten into declining PMIs, declining economic acceleration. And so, we absolutely could have a lower capitulation, but I would say that we're already kind of in what has historically at least been a valuation, kind of an accumulation phase, kind of a value opportunity. And you can look at all sorts of indicators like dormancy. It's basically another way of measuring are long-term holders selling their coins or not. And most indicators keep showing the supply side remains very tight. And so I think we're in this, kind of to repeat the point that I think we have to manage our expectations maybe about the next 12 to 18 months. Understand that Bitcoin is treated as a risk-on asset by many pools of capital, but that the long-term story looks very favorable now, and that if people basically are looking to get into the space, the network just went through a 50% plus correction, and that basically I think that the supply side is still kind of long-term bullish.
Yeah, I mean, it feels that way. It feels like we're in a consolidation. Can you what are your opinions about institutional views of this asset class versus equity, bonds, and property? And has it changed any in the past 12 to 24 months?
I think so. We can kind of segment into different milestones, and so as Bitcoin went through this process of network adoption, this monetization, in the really early stages, it was retail to retail. The friction points for even getting into the space. I actually remember hearing about Bitcoin in like 2010, and I kind of just thought about it, and I could have figured it out, but because there's so many friction points, I just kind of lost interest. That's true for a lot of people, and you kind of then in say the next cycle of demand adoption, you had exchanges come in and make it easier for people to get in. It still was kind of the industry was that was back in the Silk Road days. Some of these companies had trouble getting banking relationships. It was still very early days. Then the whole 2017 period was more the mainstream adoption. That's where you had these more regulated exchanges. They had banking connections. There was more built up infrastructure around that, and you had some of the early institutions really get into the space. But I think they built a lot of their framework throughout this bear cycle we went through in 2018, 2019. That's where I think a lot of the foundations were laid. Some of these big institutional grade custodians really built up their product offerings in that environment. And so when we had this demand increase in 2020, I think basically we can describe that this was kind of the year of institutional adoption. After we already had the institutional build out, now we have insurance companies coming in. We have a couple early pension funds coming in. Basically, these larger pools of capital have been more interested. And it's kind of important that the custodians built that foundation in the years prior. Do you see anything differently, or how are you looking at in terms of, say, the outlook going forward, economic wise?
Yeah, I think about the key institutional milestones or milestones for Bitcoin, and as you went through your historical review, it jogged my memory, and I thought, Fidelity started offering digital asset services like late 2019, right? And I think that the entry of Fidelity into this space was a big game changer. You just showed a chart by an analyst, Jurian from Timmer from Fidelity. And of course, Fidelity manages $10 trillion or more worth of assets. So I thought that was an important endorsement. I think that when MicroStrategy bought Bitcoin as a public company, and we went from, I think we saw there were only like $2 million worth of Bitcoin in any public treasury anywhere in the world. And so we smashed through a barrier there in August of 2020. I think the Coinbase IPO was another big barrier. I suppose MicroStrategy, then Square's acquisition of Bitcoin, then the Tesla acquisition, and then Coinbase. These were all interesting milestones for Bitcoin adoption as an asset class, I think, because we saw this legitimized. And then, of course, all the macro hedge funds. What's interesting here is looking back, the comments on Bitcoin by Paul Tudor Jones, Stanley Druckenmiller, Bill Miller, those were all, I think, instrumental data points. I think the willingness to discuss Bitcoin on public television by the CEOs of Goldman Sachs, by the CEO of JP Morgan, by the CEO of Morgan Stanley, the fact that Abigail Johnson would talk about this on Bloomberg. I think that those were interesting milestones, all very important to the maturation of the asset class. And so I guess before we end this discussion of economic drivers, what do you think are going to be the key institutional or the key economic milestones looking forward that will drive Bitcoin adoption?
So I think we're seeing early signs of it. Basically, I think that the banking industry is still in the early innings of interfacing with the Bitcoin network. And so we've seen, for example, after the institutional grade custodians came in, you started to see some of the investment banks come in. You started to see custodian banks like Bank of New York Mellon get into the space, and now there's firms like NYDIG that are making it easier for commercial banks to offer Bitcoin related services. Basically, a lot of banks have been seeing that, people would pull their capital out and send it over to places like Coinbase or other exchanges, and banks are saying, how can we, retain more of that in our ecosystem? And so I think basically now you're seeing more and more integration. And so I think there are milestones to watch about more banks getting involved, maybe more insurance companies getting involved. I think another big thing that's really early is the RIA space. So there's tens of trillions of dollars of capital managed by RIAs. And they have all sorts of reporting requirements, rebalancing, needs. They need certain interfaces and certain things. And there are companies now like Swan Bitcoin and others that are starting to roll out more and more services aimed at them. And I think that's going to be a pretty big, I think, adoption story over the next 3 to 5 years as well. And that's still, that's behind the curve of some of these other pools of capital. So I think as we go along, there's just more and more kind of tentacles going out through the various types of capital that have their needs met in terms of bringing their capital into the space.
Yeah, I feel like one interesting economic milestone we hit was just a few months ago when every government in the world acknowledged large amounts of consumer inflation, CPI and producer inflation, and it was acknowledged as an issue. I feel like a year ago it wasn't acknowledged, but today it is acknowledged. And probably the big economic driver that will continue will just be inflationary public policy. And if we acknowledge that we've got 5 or 6 or 7% inflation, there's no central bank in Western Europe or the United States that has articulated a plan to raise interest rates to 5 or 6 or 7%. So we're sitting in a zone for the next 3 to 4 years where it looks like we've got negative real yields, we've got continual inflationary policy, and the discussion has moved into mainstream, the discussion of stagflation. And I guess what we saw, which was interesting in the past month, was we saw a crisis of confidence in the equity market, right? That brought, it used to be Bitcoin was a very volatile asset that may or may not be an inflation hedge. And now equity looks like a very volatile asset that may or may not be an inflation hedge. And so you've got the mainstream apparatus, mainstream media, mainstream investors acknowledging crypto and Bitcoin as an asset class versus property versus bonds versus equity, no safe haven, and a mutually agreed problem. And I guess one last point I make is I hear rumors from all my contacts that there's an avalanche of macro hedge funds coming into the space, setting up accounts, like an increase by almost an order of magnitude. It used to be there was 1 or 2 macro traders. And now I think a lot of hedge funds are setting up accounts, and their view is we have to trade this stuff. Whether or not they'll stand up and say, I want to hold $1 billion or $10 billion of it for a decade, well, we're still waiting for that. But it seems like at the end of the year, at the end of 2021, I heard all sorts of stories that, conventional macro funds yielded 3 or 4% ROI in the year, and crypto hedge funds had 500% returns in the year, and 200% returns, and some at 1,000% returns, and 100% returns. So if there's anything that people understand on Wall Street, it's money. And someone made 10 or 100x as much trading that volatility. Whether or not I'm ready to marry this asset, I'm sure that I want to trade and I want to be engaged. I can't afford to ignore this. And that's kind of the message that we're hearing even from the big bulge bracket banks on Wall Street, that, I'll paraphrase them, this is not going away. We need to figure it out.
Yeah, I think one of the another milestones to watch around that topic is the introduction of a Bitcoin spot ETF, because we've seen that in Canada now. So it's not really a new concept anymore, but the United States still is in the earlier phase. We have a futures ETF. We have spot, closed-end fund type of assets, but still no spot ETF. And I think that's going to be probably a big part of getting more pools of capital into at least the trading side of it, and possibly, the RIAs and other ways of holding it longer term. And I know that you focus a lot on the regulatory front as a publicly traded company. So I don't know if you see developments there, or if you have thoughts on the shape of that over the next year or two.
Yeah. I mean, regulatory drivers and regulatory outlook. I think if you look at the market versus 2 years ago, there was crypto and the regulators were too busy to deal with it. No one wanted to deal with it. And it was like a fringe thing. And I think that with the new Biden administration and with the new set of financial regulators, we had a lot of very crypto sophisticated regulators come into the administration. And now I think there's a consensus amongst politicians, both in the administration and the Senate and Congress, that the crypto economy is here to stay, that they need to master and figure out what this means to the future of the finance industry, maybe the future of the world. What does this mean to America? What does it mean to Western Europe? What does it mean to any country? I feel like it wasn't on the agenda 18 months ago. Like, you could have just dismissed it and said, well, it doesn't matter, right? No public company owns this stuff. It wasn't important. And it was an offshore retail phenomena. And so I think that the fact is the regulators now have it on their radar. That's the first important point. I think the second point is, now instead of just calling it all crypto or cryptocurrency, which is a misnomer, I think that people are realizing that what we have here is digital property, digital currency, digital exchanges, digital securities, digital art, digital commodities, and digital derivatives. And they're breaking this into a taxonomy. Like, an NFT is digital art. Well, a small token issued by a group of people is a digital security. A stable coin is a digital currency. Bitcoin isn't a digital currency. A crypto exchange or a DeFi exchange is an exchange. And so now you've got the question of what's the definition of every single type of digital asset? There's not one, there's many. How are we going to treat them? The answer is differently, right? And it crosses every regulator, the CFTC, Treasury, banking regulators, securities regulators. I don't even know who regulates arts and intellectual property rights, in cyberspace. Probably we'll find everybody will have a part of this. So in terms of things that have happened, right? I think that if we look back, playing our little milestone game again, what were the milestones that took place on a regulatory front? I think the fact that the SEC started to opine at all, that's a milestone. The fact that we seem to have, we've had a series of congressional hearings and senatorial hearings, and the consensus out of the hearings is that Bitcoin is property and not a security. I think that's a milestone. I think the denial of the spot ETFs and the approval of the futures ETFs, both of those are milestones in their own way. The approval of an ETF, and now we've got multiple ETFs to trade futures, was a milestone. I think that caused the CME to embrace trading of Bitcoin and derivatives and the like to a much higher volume than before. I think that's brought a lot more institutional money in the space. So I think that those are interesting milestones. I think that you can look at the Crenshaw memo as a milestone. If you look at the testimony we've seen from various regulators, I think there's a consensus. The consensus that's forming in the past 6 months is the world has a demand for stable coin US dollars or crypto dollars. There's a demand, there's a use for them. I think that that's a consensus. I think that the world needs crypto property. That's a consensus in the form of Bitcoin. I think the benefits of 24/7, 365 high-speed trading is viewed as an innovation. It would be good if we were able to do more of that. I think the need for clarity around crypto securities and crypto exchanges, I think that's a consensus. And the idea that the crypto exchanges will be brought into some kind of national securities exchange program, I think that is forming. It's becoming clearer that that's going to happen at some point. And I think the regulators have made clear that in the spot Bitcoin ETF denial, they made clear that they want crypto exchanges to adopt the principles and the protocols of a national securities exchange. And I think that's on the agenda for the coming year. So I think that all of those are kind of regulatory milestones. One of the impediments to adoption from a regulatory point of view is the current FASB accounting for digital assets, which is indefinite intangible. That's been an impediment. Another impediment is FDIC hasn't given guidance on how a bank might hold Bitcoin without having a 1-to-1 reserve ratio for the asset. So lack of FDIC guidance, lack of a spot ETF, the indefinite intangible, those are all negatives, but they're all on the agenda right now. The FDIC has taken up this as an agenda item. FASB has taken up digital asset accounting as an agenda item. And the spot ETF is obviously something that people feel very passionately about. They all are on the radar of regulators. They also all have reached the level of visibility in Congress and the Senate and the administration. We know that there's an executive order that's being prepared to accelerate crypto regulation and clarity. And so I think we're waiting to see what that says. But I think that regardless of what it says, it's going to be a milestone to accelerate institutional adoption of Bitcoin, because although there's some murkiness about who will be able to issue a digital currency and and what constraints exchanges will have and what the path is to issue your own token, I think there's questions about that. There's not really any question about the use case of Bitcoin as digital property if you hold it as a long-term store of value and you disclose when you transfer it and pay a capital gain tax on it. I think that's kind of a regulatory safe harbor, or clear zone of behavior for public institutions and public investors.
Yeah, I think over the next couple of years, the kind of the big things that we'll probably get more clarity on is stable coins, basically what sort of collateral they have to hold, what institutions can introduce them and manage them. Basically, we've seen that kind of go, they're increasingly getting regulated. We've already seen changes around companies, making them entirely based on cash and T-bills rather than having a variety of assets, like some of the other ones did. And I think, more and more we're going to get clarity on that. And then two, basically what sort of tokens exchanges can offer the public. Basically, we already have kind of pretty clear guidance on what is and what is not a security, but there still are some gray zones that they can clarify. And we know, for example, that Bitcoin does not meet the definition of a security as property. Many other ones clearly do meet this definition of security. And I think over the next couple of years, we'll probably have more separation and more clarity around the different assets in the space. And it's also the U.S. is, the U.S. is a really big piece of that, but there's also that whole international component. We see, for example, countries have, to some extent, flip-flopped on how they're going to manage the regulation around the space. And it's in large part because governments are not these monoliths. There's different interests in the government. They represent different parts of the economy. There's different levels of education, throughout the government on the space. And so we see, for example, if India, say, propose a ban, but then walk that back, it gets challenged. Another group says, no, we need to regulate it. We need to provide clarity. Essentially, I think they started to see that as the industry got very large, rather than banning digital assets, they're essentially banning themselves from digital assets. They're
same in Russia last week, right?
Yeah, we've seen that. I think that's an interesting
24
one.
hour turnaround.
Exactly. Yeah, I think we're quickening the pace of turnover. For India, it took months, and for Russia, it took days. And you see that there's different groups in that government that are more or less opposed to it. And I think so far, obviously, Western democracies have been more open to it because we have the stronger foundation of property rights to begin with, and I think they're also less threatened by it. Whereas some of the more say countries that have more risk to their currency, countries that have higher scores on authoritarianism, they generally face bigger challenges in terms of Bitcoin and these digital assets in general. But even they, I think, are we're going through this process of having different countries articulate their clarify and articulate their policies on digital assets. And it generally, for the most part, I think moving in the right direction. But that there's still a lot of uncertainties, and as those get addressed, it allows larger pools of capital to come in.
So key regulatory milestones looking forward, right? I guess my list would be FASB accounting. If we see digital assets go to fair value accounting, that'll be a catalyst. FDIC guidance to FDIC insured banks for holding Bitcoin as a piece of collateral, that would be a catalyst. Approval of a spot ETF would be a catalyst. Those are my big three. Do you have any particular milestones
I
that
think
you
those are the
look
big
for?
ones. I think I'm watching stablecoin space pretty closely, and then I'm watching the international area. I'm watching what Europe does. I'm watching what India does. Some of these larger markets, and I think so far it's moving in the right direction. I think we also, it's we also need to see clarification around, say, how regulators view Bitcoin's energy policy. I think there's still a lot of education happening in that space. So Bitcoin faces less of the risks around, say, being labeled a security, like some of the other tokens face, but it's kind of uniquely singled out for its energy footprint. And I think as we, now we have multiple publicly traded miners. I think also one of the things I would look for is more announcements from utilities about integrating Bitcoin as, say, a load balancer as a way to monetize stranded energy production. Because what we've seen is you have the Bitcoin Mining Council quarterly updates, and there's been a number of them. Number of the CEOs of mining companies talk about that utilities are interested in the space, that they're researching the space, but we have not seen a lot of utilities come out with announcements and things like that. I think I think we're going to see more and more co-integration, co-location between Bitcoin miners and utilities, energy producers, and I think that's something on kind of it's partially regulatory, but it's also partially technological.
Yeah, so Bitcoin mining gets integrated as part of the sustainable, environmentally friendly, or renewable energy initiatives and policies of regulators. That would be a bullish thing and a big catalyst. We're right on razor's edge there.
Yeah, and I think it's interesting because you see it from multiple angles. On one hand, say stranded natural gas, instead of being flared or vented in the atmosphere, can be used for productive purposes. And then two, we see that in these kind of these intermittent sources of renewable production like wind, solar. Bitcoin is a way to stabilize and monetize their periods where they may be producing more energy than is needed, compared to having less energy that is needed. And I think that it's still being kind of worked through, I think, in terms of the public's cognition of that. But I think as we look out a couple of years, that's another milestone to watch, is how energy regulators, policymakers, and mainly I think the companies involved, treat Bitcoin and kind of work with Bitcoin and use it for their purposes.
Good point. And I think it leads us to the next question, which is, what's the current political outlook for Bitcoin? Why don't we start with developed world versus developing world? What do you see as the political drivers in the developing world versus developed with regard to Bitcoin?
Well, in the developing world, it's interesting because if you look, I mean, NIDIG and others, they've shown, I think Chainalysis did this. NIDIG had it in one of their reports showing the level of adoption in different countries. And generally, you see that some of the higher inflation developing countries have some of the highest levels of Bitcoin adoption, which shouldn't be that surprising. I mean, we were talking about inflation being at 7% while yields are at 0%. And that's one of the better currencies out there, the dollar. So imagine if you're in an environment where you're underbanked or unbanked, and you're dealing with double-digit currency inflation, but you have a mobile phone, as over 4 billion people have now, and so they can hold Bitcoin, for example, and for them, obviously they're still dealing with the volatility of Bitcoin, but they have a stronger incentive to latch on to that type of property, I think, than it's more apparent to them. It's quicker hitting them than it does in some of the developed markets that I think they feel they have. It's less kind of in their face, some of the challenges that people are facing in those countries. The developed world has the advantage of like we said before, the Western democracies have these stronger histories of property rights, these stronger legal foundations. And so, we've been pretty quick to adopt those. And different countries are just handling at different speeds, different ways. And, we went through this cycle early on. People said governments would ban it. But of course, what we're seeing over time is that, obviously you have some countries ban it, but the majority of them, their main question is, how do we regulate it? How do we protect people? How do we incorporate it? How do we make sure that our industries are not left behind and our public's not left behind?
Yeah, my thought on that is that I think a lot of people in the United States, they haven't lived under hyperinflation, and also they erroneously think that their real estate holdings or their equity holdings are not currency derivatives. They think that their exposure to inflation might be holding currency or holding low yielding bonds, but they don't really think about their other assets as having a currency risk. Whereas if you live in Argentina or Venezuela or Zimbabwe or if you live through a currency collapse, you realize that the currency is exposed, the sovereign debt is exposed, right? Those countries default on their sovereign debt all the time. Argentina, in essence, renegotiated $50 billion of sovereign debt a week ago. So they're always defaulting on debt, but it turns out that if you have all your assets in a local business or local stocks, those get crushed too when the currency collapses, because their revenues and cash flows are in the local currency. So if you've got a 50% inflation rate, the cost of not embracing Bitcoin is 50% of your assets would be lost to you, or 50% of your currency derivatives in 12 months. So the cost of doing nothing, the hurdle rate or the risk rate is 50, 60, 70, or 100% in those environments. So you're a fast learner. And I think that, and it's pretty obvious, I can't hold the currency and I can't buy a market basket of local stocks. And a lot of the people in those countries can't buy S&P indexes. They can't, because of capital controls, pretty difficult, to get past your capital control to invest large sums of money in another nation. So I think that the political dynamic here is the hyperinflation and the rampant inflation in the non-Western European, US developed world is actually a massive, aggressive catalyst for Bitcoin adoption that it's not going to stop right anytime soon. And this is the first currency crisis where Bitcoin existed. A decade ago, and every other currency collapse, right, in the developing world, they never had a Bitcoin. So we don't really have any experience with what happens, except that we have anecdotal evidence to suggest that in Nigeria and Venezuela and Argentina and Turkey, people are getting crypto sophisticated at a pretty rapid rate. And we know the two things they like. The one thing they want is they want US dollar stablecoin. We went from 30 billion to $150 billion of stablecoin in 12 months. So we know they want that, right? They want to go from weak currency to strong. And the second thing they want is they want to go from weak property to strong property. And the strongest property would be Bitcoin. So I think that that's a driver. Let's talk about, you see any differences in views in the US versus Western Europe or Middle East or in Asia toward Bitcoin?
Well, I think we've seen some divergences. I think one of the biggest things about Bitcoin in 2021 was the migration of mining hash rate going from east to west. And so, for years now, China's been the major hub for Bitcoin mining. And that's, they overbuilt their electricity, right? So basically, you had all these overbuilt hydroelectric dams that were not being utilized. Bitcoin miners could go there and soak up a lot of that excess power. You also obviously have a very big electronics industry. It's very, they're able to manufacture, they're able to maintain their facilities. But with the crackdown that they had on the miners there, and closing up some of their capital controls and making it harder for their mainland people to trade or own Bitcoin and other digital assets on exchanges, we've seen a really big migration of all that equipment to North America in particular, also other parts of Asia and parts around the world. And so I think that's a huge thing because for years people considered it kind of a Chinese asset in some ways. And now it's centered around North America, which I think is useful for optics. Basically, as China closes themselves off in the world, the West can then turn that around and say, well, we're gonna be at the center of this. We're gonna open up to the world. We're going to regulate it, but of course allow it as property.
Yeah. So yeah, the major regional dynamic is this migration of digital property from the east to the west, screaming home run for North America, right? Devastating economic loss for China. It kind of speaks to their lack of respect for property rights and the capital controls. But I hear that you can't actually own land in China. You can have a 70-year lease on land, or you're leasing everything at the pleasure of the government, or you have your business, you have your land, you have your property at the pleasure of the government. Now, if the Chinese and that entire regime dismisses digital property, presumably that's going to hold back their economic growth over the next 100 years, but not that they care. I suspect they might do a 180 and turn around at some point, just like certain other regimes have. But I suppose right now the primary dynamic has been just this China exodus and massive dislocation. Let's talk about.
Yeah.
Go ahead.
I think basically, yeah, I think they're maybe sacrificing some long-term, optionality for short and intermediate term management, and that might prove to be very short-sighted in the long run.
They love the idea of a cryptocurrency, or at least a stable CBDC currency in the CNY. Although I don't think that they have credibly put forth one that is being used as a medium of exchange outside of China. And on the other hand, the clear winner of cryptocurrency is the US dollar stablecoin, either in the form of Tether or Circle. And I suspect that if you look at the 8 billion people on the planet, everybody wants dollars, even everybody in China. I bet you that in China, the 2 billion people in that sphere of influence, they would also take stable USD. And the way we know this, actually, the acid test is the fact that the Chinese have capital controls. And if they drop the capital controls, the CNY would go awry and huge amounts of capital would flow out of their country, right? That you wouldn't have to fight to keep people from transferring capital if they didn't want to. So
yeah, I think game theory suggests that basically countries that don't need capital controls or have looser capital controls are in a much stronger position to embrace Bitcoin and basically then say, check to you, China. And so, basically that it's their problem if they're unable to or unwilling to open up certain things to the rest of the world.
Yeah, so the growth of Bitcoin and the growth of a stable coin dollar, both of those are going to create more pressure, more financial pressure on China and isolate them in a way. It's like isolating yourself from the internet, except it's might be worse because the network effect of trillions of dollars of US dollars and trillions of dollars worth of property on the Bitcoin network is going to be a pretty powerful network to fight against. I don't know. I think it's more powerful than simply doing your own Google Maps. I mean, they blocked Twitter and they blocked Google and they blocked Facebook and they created their own stack. But this is something which is potentially 10 to 100 times more valuable. To block it could be 10 to 100 times more painful.
I agree.
We'll see. Let's talk about left or right. What do progressives think about Bitcoin? What do conservatives think about Bitcoin?
Well, I mean, I think the good news is that there's no unanimous view, right? So you have bipartisan support across the board in some cases, even though you have, I think, different percentages. And so there are conservative politicians that embrace Bitcoin. There are progressive politicians that embrace Bitcoin. Early on in its history, libertarians were quick to identify Bitcoin as something useful for their ends. But of course, as it became a larger and more mainstream asset class, it got enough to it caught the attention of other types of politicians. In the United States, I think so far we're seeing more interest on the political right, and so countries like Texas or Wyoming have been quicker to embrace Bitcoin. Some of the early proponents in the Senate and Congress were more from the Republican side, but we do see it. When for example, we had the hang up with the infrastructure bill and how they were going to touch on digital assets. You had bipartisan politicians chiming in on that because it's really more about, I think, education versus that kind of strictly polarized political view. Bitcoin itself's not really Republican or Democrat, and so I think different sides see different things in it. There have been, there are humanitarian, for example, the Human Rights Foundation emphasizes Bitcoin a lot, right? And so I think from the left side, I think that over time, I think they'll see more of that probably. And I think that going forward right now, we're in an environment where it's a little bit more right leaning, but I don't think there's necessarily anything intrinsic about that. And that over time, it becomes, you have situations where, say, two people running for governor, they both embrace Bitcoin and they have other differences that they work through. And so I think that I think the biggest question right now is maybe how the left views Bitcoin's energy usage. I think it's more of a talking point more than maybe substantive, but it's something I'm watching. I think as that gets sorted out, and especially I think as Bitcoin gets recognized for its co-integration with the grid, its ability to soak up excess energy, if that narrative dissipates, then I think that's maybe the last big stumbling block as a political issue, at least in the United States. And then as you look elsewhere, the political axes are all different, and so again, it's interpreted
Sure.
different ways at different sides.
Well, it strikes me as being bipartisan too, and on the other hand, opposing it seems to be political suicide because there's such a passionate group of believers. You're not going to win any votes by opposing either Bitcoin or generally the crypto economy. And reading the tea leaves, you can see that politicians on the left and the right know this is here to stay, and it's a politically important issue that drives a lot of passion. So I think that I think we'll continue to see politicians on both sides embracing Bitcoin because it's so popular, and takes us to generational issues: youth versus seniors, the millennials versus the baby boomers. It seems to me like the millennials, of course, are incredibly passionate about crypto assets in general and Bitcoin in particular. Like oftentimes I'll meet people in their 50s. They'll say, "Oh, my sons told me that I need to talk to you," or I'll meet any business leader or politician say, "Oh, my kids said I got to go talk to you." So the children of the institutional investors and the politicians and the leaders are totally up on this stuff, and they're dragging their parents along. What do you see in this regard?
So the younger generations had the advantage of growing up in an environment where, digital assets intrinsically make sense to them, right? So you can play a video game, for example, and there's items or currency in that game that are of value to you, even though they have no physical embodiment in the world. And so when you have a digital currency, that I think it's quicker of a gap to jump over and understand how that works and what its use case might be. Basically, the ability to do self-custody, this digital asset is quickly understood, I think, by that generation. But it really, I think, comes down to someone's technological understanding. So people in older generations that are more technically savvy are also, quick to jump on it generally. And so there's no inherent stumbling block for any one generation getting it over another. It's all just about percentage wise and speed. And I think that's another thing that politicians are seeing is that, you generally don't want to fight the demographics trend as it relates to any sort of political topic. And so if you look at the percentages of what each generation owns, the percentage of say whether or not they own Bitcoin or digital assets, the numbers go up the younger you get as you segment the population. And so politicians, unless they want to shoot themselves in the foot, they wouldn't really fight that trend. And so I think that that's an important kind of observation going forward.
Guess it has impact on marketers too. Like everybody wants the up and coming consumer and the up and coming voter. So let's talk about milestones. What do you think are the key milestones looking forward in the political spectrum that are going to drive Bitcoin adoption?
I think a key thing is to see more clarity from different countries about their regulation policies, right? So when you in the span of days or years or months, whatever the case may be, like India versus Russia, in terms of the speed with which they talk about banning it versus regulating it, we're still obviously early innings here, and so as more countries articulate a policy about how they're going to enforce that, how they're going to say protect the consumers from scams, things like that. But on the other hand, how they're going to allow institutions and people to invest in the asset and participate, and for companies in their jurisdictions to build on top of it, to innovate. So I think that's the key thing to watch. I think also, basically stable coins being issued by banks or integrated with banks in some way. Bitcoin being more and more integrated with banks. I think any sort of clarity around that. Any in the United States, any pro-Bitcoin governor, pro-Bitcoin senator, congressperson, mayor, potentially presidential candidate. As if you were to map out over the past several years, say the percentage of explicitly pro-Bitcoin politicians, it started out at virtually none. You might have, say, some state level, legislatures that are in on it, but we started getting up to the national level. Nationally recognized names start to have a position on Bitcoin. That has spread like wildfire, and it's still kind of early to middle innings, I think. And so I think basically everyone you check off the list of, okay, here's another politician. Each one of those represents a milestone, and I think there's hundreds to go.
Yeah, I suppose in the congressional midterms, the upcoming midterms will be the first where Bitcoin was a campaign issue for anybody. I see in gubernatorial campaigns as becoming a campaign issue. Maybe the next election will be the first election of a president of the United States where it was a campaign issue. And certainly nation state adoption is key. Watching the policy of the more progressive nations, Singapore, UAE, they'll be leaders in this. Normally they are leaders in free market, financial, technology innovation. I would expect the UAE, given its track record, they pride themselves on being very forward-thinking, mobile, internet savvy. I think that you might see some kind of clear guidance from them. And of course, the 800-pound gorilla is what happens on Capitol Hill in the United States with regard to this. But I think we can look forward to a lot more political conversations that include discussion of Bitcoin, and by inference and by implication, they're all accelerating the adoption of the asset class. No one's talking about things that are irrelevant to life. So speaking about relevant, let's move to our last subject, technology. What's the technology outlook for Bitcoin? What's top on your radar? What do you think about the influence of the technology players on the space, and what's happened and what's going to happen?
So I would say two things are really appearing to me the most. One is the migration of the hash rate to the United States, and the introduction of publicly traded Bitcoin miners has been really fascinating to watch. Financing, to make basically allow those companies to access capital has really improved in the past 2-3 years. A number of providers in the industry have tapped into that market. Now they have, in many cases, public capital to work with. And so I think that's a huge thing. We also see some of the mining hardware. That's still, so a lot of that is still made in China. But we're seeing announcements from companies like Blockstream, Block, and Intel about getting into that space more directly, the hardware side of it, from a North American point of view. And so I think that's one of the exciting things to watch. And then two, I think the Lightning Network is really fascinating. I think especially Elizabeth Stark and Lightning Labs has done a lot of tremendous work building out the back end, all the infrastructure that allows all these companies to integrate it, into their offering. And the way I would describe it is that Lightning now looks like Bitcoin looked in 2013, right? So we have this build out of a secondary layer, and it's a rather small team of individuals. Lightning Labs has, say, dozens of employees. You see the people at Blockstream working on it. They're independent developers, but it's tremendous how much they've been able to build because the technology itself is so enabling, and basically there's so much energy in the space. And so I think basically last year Lightning reached kind of critical mass in terms of liquidity and stability. And getting, now it's getting key integration. So exchanges are integrating with Lightning. Jack talked about Cash App integrating with Lightning, and El Salvador obviously integrated with Lightning. I think that Bitcoin went through this phase of it went through this early period where retailers would say, "Hey, we accept Bitcoin now." That didn't really catch on because base layer Bitcoin transactions are not really meant for buying coffee, and people don't really want to part with such a high power asset. They don't want to do a taxable event every time they do something like that. But I think as Lightning builds out, that enables a lot of technologies, and basically sets this foundation. And I talked before about friction points, right? So early on, it was hard to buy Bitcoin. It was hard to interact with Bitcoin. And Lightning's gone through a similar pattern, of course, several years delayed. And so as, for example, Lightning Labs and these other providers roll out better and better tools. It becomes easier for companies to integrate it with it. It becomes easier for consumers to use it. And it can be used not just for transferring Bitcoin, it can also potentially be used for transferring other assets. It can be used for transferring information. And so we see, for example, Impervious is building on it. And so I'm kind of watching all these different milestones in the Lightning Network in particular.
Yeah, I think Lightning's a game changer. I think when Lightning can move other assets, when it can move Bitcoin, but when it can also move a stable coin, a US dollar stable coin, I think that makes it something you would want to plug into billions and billions of devices and spread to 8 billion people in the world. And so that's a big deal. I think the idea of an open, permissionless, non-custodial monetary payment network, which is what Lightning represents, is maybe just as profound as TCP/IP or HTTP or SMTP or something. So it's a big deal, and it will then wake up the big tech companies, the Apples, the Facebooks, the Googles of the world. I don't think you can have a competitive mobile app if you don't build Lightning into it. If you roll the clock forward a few years, it's just a matter of time. The Intel miners are a big deal. Hardware wallets and hardware miners are a big deal. And maybe one of the themes is publicly traded companies in the United States shipping Bitcoin hardware, Bitcoin devices, Bitcoin services, Bitcoin software. That's a big deal. That will accelerate adoption dramatically. And we've seen Block, PayPal, Coinbase, Robinhood, they're catalyst. If we start to see some of these offshore exchanges like Binance and FTX start to do more business in the US, that's a catalyst. I think there's $20 billion of crypto VC or more. That's massive amounts flowing in the space in the past 12 weeks. That's a catalyst. I agree with you on Bitcoin miners. I think I count about 24 publicly traded Bitcoin miners by the end of the quarter. And so, as I've said before, you get that many public companies, they're all holding their Bitcoin. They're not selling it. In fact, they're raising capital so they don't have to sell any. So the stock to flow is leaping. The amount of Bitcoin available for sale is falling. And I think that'll continue until the Bitcoin mining sector flips the stock to flow negative and they start net buying more Bitcoin than is being mined. And that makes this a really scarce asset. And it's something you can do with a scarcity like Bitcoin. It would make no sense with silver or gold or a commodity or oil, because those things are commodities and they're unlimited, but Bitcoin is not. So it makes sense to basically recycle your production into your treasury and hold it. So looking forward, and we'll end on this note, what are the key tech milestones that you would look forward to that you would say, wow, this is a really key seminal event that'll accelerate Bitcoin adoption?
So I think so. Right now we have the announcements, like we talked about, for some of these North American hardware producers. I think the launching of some of those hardware would be key milestones. It's harder to launch than it is to talk about launching, and so I think those are milestones to watch. I also think that any sort of new offering that happens on Lightning or things that catch on Lightning are worth watching. And so, for example, right now we think of Bitcoin as one thing. But Elizabeth Stark and others have pointed out for years that you can separate the idea of Bitcoin the asset and Bitcoin the network. And so these different technologies that harness Bitcoin the network, like for example, transferring dollar value, for example, I think that's a use case that's still underserved, and I think it's worth watching. I also think that basically, like I think you pointed out, basically more and more kind of hardware design. So you made the example of having a phone that has kind of a hardware wallet built into it, just instead of a mobile wallet, maybe a hardware wallet, things like that, more integrations. I'm interested to see products that Block might do, and these other companies that have talked about catering to that market. And so I think anything that launches and that seems to be successful is a milestone worth watching.
Yeah, million user products coming from well-capitalized companies.
And they've been able to raise capital. So even though right now kind of the Bitcoin price is in this consolidation pattern, a lot of companies have been able to raise capital. And so basically every year, say unlike a commodity, there are countless developers working to make the network better, both in terms of say Bitcoin core developers and then Lightning developers and then surrounding ecosystems, so wallets and products. So every year it gets easier to use Bitcoin and more things that Bitcoin can be used for.
So the future looks bright. Lyn, thank you for joining me today for our Bitcoin Outlook conversation. I think we got a ton of interesting milestones to look forward to. I think we've checked off a bunch of milestone checklist items. And do you have any final words for the audience?
I think that covers that. I think basically we're in kind of this accumulation phase, and I think it's important to maybe manage expectations around near term whilst emphasizing the long term, looking out at maybe structural risks, weighing those risks. I think obviously one of the impediments to more large amounts of capital coming into the space is volatility. And volatility feeds on itself, negative and positive. So as more people hold Bitcoin, the volatility can go down over time. We've already generally seen that cycles get a little bit less explosive to the upside and the downside than they used to be. But then that has a feedback loop where if it gets less volatile, people can, or pools of capital, institutions and people themselves can allocate a larger holding to it, which then kind of starts that virtuous cycle. And so I think as Bitcoin matures and acidifies and basically gets less volatile, it entrenches itself more and more as a percentage of say global assets. When you look at how much dollar value is in all global assets, what tiny fractions in Bitcoin, I think it can grow from a negligible fraction to a tiny fraction to a small fraction to a medium fraction as that volatility goes down.
Yeah, I couldn't agree more.